hello, 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 hello.
don't hesitate to ask your questions. Just make sure that you ask your questions in the chat box. Not do not don't hesitate to ask your questions. If you have just make sure that you ask your questions in the chat box. You can just wait until the speaker is over, and once the speaker has done speaking, then you can ask your questions. That's for the format. So the format is very simple. We'll have speaker one, two, we'll have speaker one first, and then we'll have question answers, then speaker two, then again question answers. At the end, we'll have again some time left for more question answers. So a lot of information, to be very honest. I think that's pretty much clear what we're here to do. Thank you so much again for joining in. I would love to start. So a lot of people here don't know who we are, as in who is hosting this event and why is this event being hosted and everything. So for those who don't know who's 23 Ventures, we are basically an accelerator. If in a very easy language I can say, we are an accelerator that helps student founders go from 0 to 1. And in a very student language, if I can say, it's basically a business school which helps students specifically building tech and SaaS go from 0 to 1 with our resources, mentors, advisors, and everything. For those who don't know us, we don't do corporates, we don't do fluff. And if you are a student and if you're trying to build the next generation of founders, we'd love to have you here. I'm just finishing in. So we believe that the best resources are not credits, are not certificates. It's the person you are sitting with us in front of right now, the investors. So that's pretty much it. Let's just stop talking about it and let's start doing it. That's our motto also. 23 Ventures is built by the founders, for the founders. And herein I would love to invite our first speaker, Sonia Sudnani. Please. Hi, Sonia.
Hi, Nikita. Hi, everyone. So I've prepared a few slides for the talk today. Nikita, while I introduce myself, if you can please also allow screen sharing.
Yes.
So quickly to give background about myself and the organization that I'm representing. So I work at IMA Ventures, which is essentially the entrepreneurship and say venture platform for early stage startups across India. So we have been incubating, accelerating, and investing in early stage ventures since last 1.5 decades. We do so by providing both dilutive, non-dilutive grants, and we have taken an institutional approach when it comes to pre-seed funding and investing. So in today's segment that I've been assigned, I will mostly be covering how I look at pre-seed investments as a VC and also as an institution that I'm representing. How does the VC investing really work? So that it gives you all budding entrepreneurs a perspective on what goes on at the other side of the table. So Nikita, if you can just allow the screen share, I can maybe take the participants.
I think Weber, have we allowed it? Sonia, you can try now.
Yes, now I can share. And of course, thank you so much, Web of Nikita, for hosting me. I'm sure we're going to have an interesting discussion today. Great. So I am assuming that my screen is visible now. So first of all, what I would like to discuss is how does the VC funnel really work and how does it look like? Starts from all the inbounds that we receive or referrals that we receive, wherein we do like a first level of screening where we skim through the information, check a little bit of LinkedIn backgrounds, profiles, etc. of founders, and if it appeals backgrounds, to us, profiles, etc. of founders, we then sort of schedule an introductory meeting. And if it appeals backgrounds, profiles, etc. of founders, we then sort that if you've not really now a
these
lot of
backgrounds to our
the kind of narratives that
if you've not really
across in the deck, a lot of decks get rejected at this stage itself. So ensure that you put the best foot forward, and your deck itself represents the kind of homework that you've done in terms of ideating, in terms of understanding your respective industry and what you aspire to build in that segment. More importantly, what I will be covering is what happens during first call till until the deep diligence that we perform, which is roughly about I would say from month and a half, sort of. I would say from month and a half in terms of engaging with the sort of drawing some motivation, insights of them building in the respective industries that they do. And then eventually, if it appeals to the team, then we present it to the IC. So these are the three stages that I'm indicating. What happens from the first intuitive, I would say, judgment of a VC. Portion of it gets assigned to, there was a product being built where there was no market need. Hence, we spend a lot of time assessing that, what is the kind of demand that the founder has assessed. And again, whenever you are having that introductory call, founder will try to understand that how rich your ground level insights are as a founder, as an entrepreneur. So you need to be thoroughly prepared for answering these questions. Like I said, it's the bold, big market opportunity that investors are relying heavily on founder educating them. So talk about some of the key numbers, and I mean, I'm sure a lot of you would know already, TAM, SAM, SOM. Then the key lies in how did you arrive at them? Are you just referencing research report built by a consultant about 2 years ago, or you've done some ground level homework? I'll give you an interesting example of an appliance, something that I just spoke with today. In fact, they were trying to build a very differentiated category in the home appliances market. And when I asked them, how big do you assess the market for you guys to be like? So they said that we want to go after those companies which are, we want to go after those homeowners which are at least paying, say, about 3 to 5 crores for acquiring new houses. And when we assess the number of such units being sold out or under their interiors, this happens to be about 7 to 8 lakhs fresh units. So to what extent would that founder would have gone?
Sunil, you can unmute yourself now.
I'll continue. So, like I was saying, pay as much attention that you can to assessing your underlying market, because if you don't come with that research, that rich insights, at least I, as a VC, tend to then not carry on the discussion beyond 15 minutes. And I'll tell you why. Because as founders, as a team, you're betting your career to build something exciting in that industry. But if you don't understand the industry well, why would you want to risk it? as investors, our risk gets hedged because we get to back about 10, 20 startups under a fund. But as a founder, if you pick a wrong market, an incorrect market, it costs you, say, about whatever 4-5 years of trying to build in that industry. So that's why market is where you need to spend a disproportionate time educating the insights that you have to a VC, or why do you think that this is the right time to be building. So at times what also happens is that consumer behaviors are shifting. So for example, Gen Zs have now started earning. So what kind of purchase habits are we looking at coming in from this generation, which has now a paying capacity? So understanding that the dynamics of whatever industry, and at times it's not even the industry that you are pitching for, but could be some parallel adjacencies. So for example, why a quick commerce took off. So perhaps we've reached a stage where people want to pay for convenience. What else convenience can be introduced to as a experience, as a service, etc. So that's how you go about in terms of understanding consumer behavior, and that's how your conversation with a VC becomes more rich and more interesting, more appealing. So ensure that you spend at least invested your time in understanding the industry or the market that you're building for. I'll give you an interesting also example of one of the bigger brands, which is Airbnb. So before Airbnb was born, there was already a company called Couchsurfing, which used to do the same thing which Airbnb enabled. But the only and the more important feature that Couchsurfing did not have, which Airbnb took advantage of, Couchsurfing did not allow to pay for availing the rental overnight facilities. In fact, it was built more from a community perspective. What Airbnb saw was a good traction and an opportunity to monetize the same service that Couchsurfing was allowing on its platform. Hence, before building out a product, understand the problem statement. So a product cannot come before problem statement. We in fact don't really appreciate when we figure out a founder who knows how to build a technology, build a product, but has not really spent as much time in assessing the demand or problem that it solves. So I would say that before knowing what you want to build, first validate whether the market needs it, whether there is a problem that exists, whether the customer wants to pay for it. And that cannot happen like just browsing through web. You need to go speak with your potential users, customers, differentiate them, as in who's going to be the early adopter, who's the persona that you're targeting, who's definitely not the persona that you're targeting. So that is a level of clarity. See, at the stage which is pre-seed, why would someone invest in a founder? Not because they have built out a very interesting product, not because they have already seen a traction, but because the clarity of the need, the demand, the customer, the user is very crisp and clear. So that's what you need to spend time on. I'll give you another example. So when Dropbox was pitching to the VCs, it did not pitch, like there was really no customer for cloud services. But what they did was they in fact created, I think, a demo or a video of what it will be if you have Dropbox as a service. And then the kind of viral reaction that it received on that vision was the pitch that founders made. So at times you don't even need a proper product. You just need a concept that for the TG that you're building has a great appeal. So that's how you go about in terms of validating your problem statement. When it comes to product understanding, again, to what length does a VC go to in terms of understanding how you're visualizing the product and building of it? So again, maybe one thing to for you guys to remember is that VCs are not really looking for understanding in its entirety how will the product look, but it is the logical sense that the founders would have that what are the critical features and capabilities that the product should have, and what follows next. What are the must-have features versus what are good-to-have features? What are optional features? So that's how you go about in terms of understanding product. If it's say a software, if it's a deep tech company, of course we go to the extent of assessing, say what's the potential of this being an IP play, what kind of say risks that value chain exposes this company to. So all of these things get captured as part of the product. Maybe during Q&A I can take more questions around if you want to know for your respective product how does a VC go about in terms of assessing. Next and most amount of time I think I'll spend here. See, before product gets built, a VC just has market and the founder to evaluate. So they spend as much time as possible to assess the team behind this opportunity. I've broken it down into 5 stages of founder evaluation. This is also borrowed from the masterclass that we do for VCs who are entering the industry. So this is essentially borrowed from how does a VC should evaluate a founder, so that you get a perspective on what is it that that's prominently taught to these young analysts or VCs. So what we ask VCs to do is a hygiene check as to for a founders who are attempting to build in a category which is say IP rich, etc. So do they carry that previous skills background? Could be academic qualifications, etc. And I would also go to an extent to say that we've not only backed the most experienced founders, we've also backed fresh graduates building something disruptive in deep tech. We've funded companies which is being built by, again, student-led teams who are maybe inexperienced, but they have the great understanding about the technology that goes into building a disruptive. And these are across industries like space tech, aviation, etc. We also believe that young founders have a good pulse of their generation, the young generation. How do they think about their habits, their work streams, etc. So we really like to see a balance of skilled, experienced entrepreneurs and also at times young founders building based on a very sharp observational insights and the great technical exposure that they would have received due to their academic backgrounds. Moving on, motivation to start. This is very important. We are not funding companies so that they have a good line item in their resumes. We are funding because we want to back their dream of building something interesting, disruptive, worth talking about. So that's where a lot of time gets spent to assess whether there is a real motivation to build, if the founder is sitting on a real unique insight that hasn't been capitalized on yet. So this involves also a lot of semi-formal discussions that VCs tend to have to just really get a gist of, how founders are thinking about the next decade. Have they covered their personal liabilities, or is there a risk that maybe 2-3 years down the line they will start to feel the burn of an opportunity cost, and might want to drop this entrepreneurial journey in the midway. So a lot of time is also spent in terms of understanding, founders' personal motivation to begin this journey. Some of the traits. Now, this is not a black and white kind of a checklist, but for founders who are pitching to VCs, throughout the stages that I mentioned, we try to also catch on different traits that the founders sort of demonstrate. So some of the traits that we really admire in a founder is a high sense of integrity, honesty, discipline, knowing what lacks, what is already in place. Good, I would say, understanding of how far they've come in their journey and what also needs to be built. I read this very recently where someone put it very well that if, as a founder, you've demonstrated that you are thinking like an investor. What does an investor think? That you are putting some resources to use, including yourself. And if you have that clarity in mind, that what needs to be done, what is still lacking, etc. If you come with that openness and clarity, that is the best kind of conversation that the VCs can have. And they can also coach you, they can partner up with you and help you out in the journey that's next to come. Relationship amongst founders is also very critical. A lot of times what we see and don't appreciate is teams getting formed without a prior experience of working together. So you might have known a co-founder through your personal network, etc. But if you haven't worked with them, right? It could be a project, it could be a working relationship like a customer vendor, could be anything. But and it could also be like working together as classmates, batchmates. So some bit of chemistry, maturity of having worked before has to be in place, because I think the journey as founders in itself is very dynamic, very challenging, and we've often seen founders sort of not align on the visions. Like these are big things, right? And if we get a sense of that, founders don't share that alignment, that's one of the major reasons for us to have not moved to the investment decision. So I would say that ensure that you spend at least good enough of time in terms of building that rapport relation, because if you haven't, it reflects. If it won't reflect in the first conversation, it will definitely reflect in the in-person meeting that you're having with the VC. Lastly, relationship with money. You as founders are supposed to be good at capital allocation, good at financial resource management. So how good sense do you have of how much money is required? Where are the priority expenditures? Where can the equity versus debt can be balanced out? So all of these things is expected that a founder would understand, or if not understand, be open to learn, educate themselves about. Last slide, competition and differentiation. Again, this is part of the market itself, but I'll still capture it differently, because a lot of times in industries which say involve building brands, consumer technology, a lot of time and resources get spent in terms of at times educating, creating market. So especially when you are building categories, you then also have to be mindful, are you early first mover? Do you have that as an advantage, or do you have that as a disadvantage? There are a lot of times when we are backing companies where we know that eventually capital is going to be the moat. Do founders understand that this is the ultimate differentiation that will either make or break the company? So all of these things get played out when it comes to functions like these. What then we look out for is founders who are sellable, as in terms of whether they can raise big capital from big funds when it comes to follow-on stages like Series A, B, and onwards. So knowing that the industry that you're entering will require a good amount of capital, and being already aware of what does it take to raise that kind of capital, I think that's the part of homework that you do. So that's about it. I'll take a pause now to see if we have any questions.
Ravi and Dhruv, please put your questions in the chat box. Dhruv, we'll share the PPT with you after the call. Sonia, we have the first question by Abhishek. How do you see pre-seed investments for a deep tech AI-based startup?
So, to give you a very candid, honest feedback here is that, I mean, again, deep tech and AI are very two different segments. In terms of AI, and this is more of a thesis question than the stage specific questions that we are asking. But in terms of thesis, my personal take is that we are well past the AI agent era that generative AI opened up. What we are now starting to see interesting is that AI is here to disrupt an entire industry. It has that kind of potential. What changed is that early the agents attempted to do patchwork automation for workflows that were already built in, and these workflows revolved around the processes designed for humans, by humans, around humans. Today, with the AI in hand, we have the opportunity to displace industry, reimagine the industry rather. So, say for example, how an Elon Musk applied first principles thinking, build SpaceX for space tech industry. Similarly, now that you know what AI can do, reimagine a service industry. It could be like what parts of these should ideally be automated. How can you reimagine the workflows now that you have AI, etc., etc. So I am looking to see more entrepreneurs create AI native companies, which has the potential to displace conventional companies or industries.
I would, since there are so many questions, let's pick the most common one. What are the specific things you analyze in a founder from LinkedIn? Like key points, if you can give that.
Sorry, founders for?
What are the specific things you analyze in a founder who reach out to you on LinkedIn?
Okay, so it's very difficult, but say for example, whenever you reach out on LinkedIn, like I said, ideally also attach say a deck or something, and then the deck should ideally have then the kind of insights, kind of pitch narration. It should reflect very clearly on your presentation. I mean, like I said, there are very different kinds of proposals that we're receiving, right? So at least as a VC, we have a responsibility to not discard an idea just on face value basis. So someone recently pitched them building a bin company, like a smart bin company. So I mean, a VC would say, why would I want to spend my time thinking about a bin as a product? But when you get into those conversations, you understand that it's an interesting proposal. So it's the onus lies on VC to spend time understanding what proposition you have, but ensure you have done justice to the deck that you are sending across.
Right. So the next question is, in terms of traction, do you think the early signups through ads or LOIs are kind of important?
Yes, absolutely are. Early sign-ups, best if you can also get them to pay in advance. So waitlist is always appreciated when you are building a consumer-facing product. See if you can also get them to pay advance, so that will give visibility on whether or not this is not just a interesting product, but also something that people would want to pay for. LOIs again shows that. So again, for any B2B play, we give a lot of weightage to people who can sell, because technologies, I think they're losing the shelf life. So anyone can now build products, now build technologies which are not too IP led. But if you can't sell, I think that is the make or break for us.
So, continuing this answer only, there's a question that says, if the revenue is zero, what valuation should we like? What framework should we use to get the valuation done?
Again, I think valuation is a very different topic. So valuation, I would say, is very subjective. Pre-seed, more often than not, we don't have a revenue generating company. Depends on the industry that you're going after, how much fundraise you're doing, and see, a thumb rule is that each stage you see a dilution of roughly 12 to 18%. Including pre-seed stages. So if you say are already, if you've assessed that in say next 18-24 months, this is the amount of money that I'm looking to raise, so accordingly you apply the dilution formula and estimate the valuation that you should reasonably have. And then it all ultimate number depends on the negotiation of both parties.
Understood. So, do you invest like do in VCs, pre-seed VCs invest in a very competitive market, and is incorporation of the startup necessary before raising a pre-seed?
Incorporation is absolutely necessary because you need to receive funds. Fund only goes to a company's bank account, not a founder's bank account. For the industry, see, competition, a sign of competition is always good to have, because if there is no competition, there may not be a need to build a category altogether. Having said that, if the competition intensity is such that there are already too many different value propositions offered in the market, the kind of differentiation that you're bringing is very incremental. So then I think then we steer clear of those markets.
Understood. Let's just take last question, which is from Tanmay. Which kind of market do you think will be best for 2026? And what is the one advice that you would like to give to these pre-seed founders?
Got it. So I can talk about 2 or 3 segments. Like I said, in AI, build AI native or attempt to build AI native companies. There are a lot of industries that have been undisrupted, untouched. See if we can now reimagine those industries with the advent of AI. Second is consumer. Consumer behaviors are constantly shifting. There is a new demography every year which has now adopted power to pay. See if we can learn from those changing habits, changing behaviors. What do they value more, and what can you build for population across. Lastly, in deep tech, again, there's so much going on, geopolitically. There is I would say still a lot of room, a lot of opportunity for people who come from technology backgrounds, hardware backgrounds, manufacturing experiences to attempt to build for again all the opportunities that we are seeing across manufacturing in India.
I think there is one common question that I just saw. So, what are your views on the AI market, like voice AI market, and how massive the adoption is, plus the AI lending companies? Like everybody here is talking about AI agents, AI coding agents.
Right.
How do you think that?
Right. See, the reason why AI questions you are hearing so much is because I think with the kind of now APIs that have opened up, it's very easy to imagine, or at least it's reasonably easy to imagine solutions being built with use of AI. But I would say go beyond, because there are dozens of other people who are also pitching in the same category. See if you have some validation traction from the market. Like I said, whenever you are entering a crowded, easy to build category, what only backs you or helps you stand out is the market and user research. the idea may sound very simple, but if your user research is rich with insights, I think that is the difference that you can create.
Perfect. Thank you so much, Sonia.
Thank you so much, Nikita.
Yes, guys, again, we'll have question answers at the end of the meet. So if you have more questions for Sonia, you can just wait at the end to ask such questions. Next up, we have Nilesh sir. Nilesh sir, are you here?
Yes, I'm here. Am I audible?
Yes, sir. You can go ahead.
I hope you can see me.
Yes.
Yeah. So first of all, thank you guys for having me here. Sorry, I've been amidst travel. I've been running around for quite some time, and it's really happy I could join in today. So yeah, I've been listening to what Sonia has been saying. Pretty much everything remains the same. I'll touch a few side of things because I've been writing a lot of checks recently, not just for me, but even for friends, colleagues. And what I've been doing is I've been doing that across the globe, so I can kind of give you a little bit more background, non-technical, non-academic kind of stuff to you guys. And I've been seeing the kind of questions that have been coming up, so I will leave a lot of space for Q&A rather than me speaking over it. I'm not following any deck, first of all, because the time that I have is very limited in terms of, what should I cover. But deck, with a lot of founders, what happens is the deck becomes a, guiding principle, which especially in pre-seed doesn't work. So if you're going to ask me what are the rules, what are the things that are going to happen, there is practically nothing, no set rule, no guidelines. What is right, what is wrong is something that is very case specific. So if you think you can, take up a template, use a mindset, follow a trait, or, something that has worked for someone else, doesn't happen. Pre-seed and seed, everything is out of the picture. Now, when I myself look at some things, before I move on to a couple of myths that are pre-existent in the market, I will want to tell you guys, when you approach me or any investor, or, shoot texts over LinkedIn, shoot texts over email, we are loaded with texts, presentation, meeting requests, and things like that. It's really difficult. Like last night I was there in Dubai. I had practically 3 meetings on the airport. So that's the kind of, because everyone, we suddenly into a market where everyone wants to love to have that founder tag on their LinkedIn attached to their name, but not everyone is founding something, or not everyone is working on a problem or a solution idea that is out there. So my first submission to you guys is, be original. Do not follow a track, do not follow a deck, because the moment I know where I'm heading on my next slide in your presentation, I'm already out. I mean, do not even consider me writing a check or even showing interest for the next meeting that is out there. Second, understand what you are doing. It is really important, especially at the pre-seed stage, where I know 90% of the ideas are just copycat. It has to be very specific, very precise. It's as simple as applying for a job. How do you attract, HR's attention towards your CV? It exactly works the same way for a VC, especially when, like again, the previous speaker spoke about having hundreds of decks. Trust me, guys, there are 500 decks that reach my inbox every day. And my just point is, where do I find a differentiator? Because a lot of founders just follow some template or the other, which is absolutely nonsense when it reaches a VC. If you think that there is a market out there, if AI is something, your venture should know where AI is fitting in and what are you solving with it. extremely critical. If you pick up any of these buzzwords and themes that are working around, it is extremely difficult for me to understand. You say deep tech, I should know what your ultimately it has to solve a problem. It can't be a database or a collection database where I'm sitting and understanding what a deep tech is. No, that doesn't work that way. Thirdly, there is another thing that is on the pitch deck, which most of the pre-seed guys, because I can understand a lot of you do not have a co-founder, a lot of you are so busy creating what you are creating that you tend to forget the business side of things, is show me the exit. And that doesn't come for pre-seed only. Of course, it becomes more important for pre-seed, but it is extremely critical at every stage of funding. As an investor, I love to be invested in your business, but understand it's not my baby. You can love your venture. I am there to make money, and not just for me, for my investors. So if I am investing in you, or if I'm looking at you, I need to know the amount of return that you get. आप अगर आपने एक नॉर्मल SBI में भी जाते हो और आप FD करवाते हो, आपको स्लिप पे लिखा हुआ मिलता है कि 5 साल बाद आपको कितने पैसे मिलेंगे. If you expect the VC to do that calculation, he's not doing it. Even if your idea is brilliant, there are tons of graveyard ideas which are known as that a VC has rejected. Maybe they go and become something or the other. Fourth, at a pre-seed level, guys, please research. The moment you say you have an idea, there could be tens of similar ideas that are happening across the world. So please be very, very peculiar about what your TAM is, what your TOM is, where does your idea fit, and does that idea fit in every surrounding that you go to? Maybe it's geographical, maybe it's technical. It should fit. It should solve the same problem. It can't happen that your business evolves or you pivot in such a manner that your original idea changes. And it becomes extremely difficult at the pre-seed level because you are unknown, I am unknown. I'm playing blind darts in the unknown, thinking that there is a market to it, but does your idea actually fit? And sixth, my final submission, because before I start taking in questions, is exactly do the elevator pitch. Go to a 24-floor building, recite your presentation while you go from the top to the bottom and from the bottom to the top, and your pitch should end in that. Be that precise. Now with the help of AI, you do not have to even apply a lot of your mind on the user side. You can condense your presentation into a 2-3 slider, not even a slider. Even if you tell me what problem are you solving, that is exactly, it gives me an idea whether by the time I reach the bottom of the building or the top of the building, whether you are doing something great or not. I do not have to go back to your pitch deck to understand and to do my due diligence unless I'm very much convinced on the idea, because there's nothing to do due diligence apart from the founder. On a pre-seed level, there's practically nothing that I have in my hand that I can look at you or understand you apart from running on what you do on LinkedIn. Lastly, as a pre-seed, when you approach a VC, again, understand if your requirement is a crore, a couple of crore rupees, unless you are approaching a micro VC, for any VC, that is a very, very small amount. And the attention span that you are asking me to do due diligence for it becomes extremely difficult. So your first pitch to me can be a 2-liner, but it should solve some problem or the other. It can't be that I'm running an idea which, I have seen somewhere, I've understood most of you, if you have written inboxes of most VCs, accelerators, incubators, you will realize that, a lot of times you'll get a feedback that this is an idea we have seen previously as well. So please do your homework well. You bite the food and give it to me to chew. If you are expecting me to do that job, unless I'm really satisfied on your idea, I'm not doing that. And one common thing, again, because I heard a few Q&A, if you actually have an idea, do not go by buzzwords. AI doesn't excite me unless it is solving a real problem. And I'm telling you because I do sector agnostic deals. There are still a lot of places, a lot of areas where people are ready to invest. I do a lot of food investments. If you go to my LinkedIn profile, I do heavily on food, restaurant, where AI has still not hit. I mean, don't give me robotic arms making your life easier in the kitchen. I'm okay. If there is a cook who's doing a better job, it's really, really possible. Unless you do not give me a problem and a solution, it doesn't matter whether you are an AI or a deep tech or any other thing. It should satisfy me as an answer. So yeah, that is what it is. I know we have brilliant speakers ahead and after me who will, guide you better in that journey. But I thought, putting points which actually matter on the street was more important than, giving up on things which, you have been, so yeah, that is what I have been doing. I have been looking. I'm keeping it very crisp. I would love to take a lot of your questions and utilize my time there, rather than just speaking something that I would want to speak. So yeah, Nikita, Weber, up to you guys. How do you want to take it ahead? And I'll be happy to answer.
Perfect, Nilesh sir. So I think people have started putting out questions as well, and we can go ahead with that. We can have the first question. What are the key things you look for when evaluating an early stage e-commerce startup?
E-commerce, if you are early stage, I'm not really clear whether it's pre-seed or seed. But if you're already working, I would love to have to look at your operational metrics. Secondly, what problem are you solving? That is my first slide that is up and out there. I am not really concerned because if you speak e-commerce, you're doing the same thing which is there. The reason Zepto caught attention of a lot of people was because Zepto said people have been delivering things since the time Jeff Bezos came up with Amazon. Then we had a dot-com bubble where you had hundreds of companies doing the same thing. What is the differentiator that you were putting forward was a 10-minute delivery, which I thought was a very, very valiant proposition. I don't have to look at anything. If I know it's a 10-minute delivery, there is a need for it, there is a problem, it is solved. Yes, that's it. That is what I need and I understand and I require. I don't need the market size there. I don't need the Tom there. I don't need anything. I mean, I do not like to ask questions which are, just out of the textbook and not actually relevant to me. So if you are an e-commerce company, how different are you from Amazon on the delivery side? How different are you from any other e-commerce site on logistics side? And how different are you from, Zepto, which is doing a 10-minute delivery? And then the fourth question, why are you relevant? Because if you can answer that, you're not just attracting an investor, you're also attracting a customer of why a customer should visit your website. Like, again, in terms of haste, I'll give you there are a lot of e-commerce, dressing e-commerce websites or, makeup e-commerce websites that have started doing 10-minute delivery. I find no sense in that. I mean, no women in the world that simple. Of course, there could be incidents and accidents where you might have forgotten your makeup and you need it. But most of the impulse purchase that women make are in the mall because they see a variety of things and not on the e-commerce website. There's a very small market that we're speaking about. So yeah, if you can give me an differentiator that is out there for any e-commerce, I'll be happy to look at it. I'll be happy to guide in and around it. But do not give me a copycat Zepto or a copycat Amazon. I've already seen those.
Great, sir. So the next question is, when there is already a lead anchoring nearly 50% of the pre-seed round, what makes the co-investors comfortable joining and what mistakes should founders avoid?
If the lead is identified and 50% is a really big stake, I hope none of you is diluting that kind of stake because you practically close your doors for the next rounds that are coming in.
No, 50% of the round.
Exactly. Even if it's 50% of the round, for co-investor, then the game becomes really, really very easy. It is all about, getting the financial returns. So I'm not actually interested in your operational analysis. I'm not interested in your risk analysis, because if I'm piggybacking someone, I'm assuming that person has already done the research. So my intention becomes completely financial. Just tell me the amount of money that you need and the return that you are ready to give me, and that's it. I'm on board.
Great. So these pitch elements that you receive, should they include SWOT, long market analysis, heavy data? Like these things still matter?
They do. Again, I will take it back to the pitch deck. It is not a necessary template. If it is actually something that you feel adds to the presentation or reduces my workload in terms of understanding, it should be there. I mean, it doesn't give me a happy thing that I'm watching a 20-slide PPT coming out of a consultancy. I will be happy to look at a one slide presentation that helps me understand what problem are you solving. And trust me, that nothing makes me more happier than something that can save my time. And if you can do that for me, I'll be really, really happy, really, someone who would want to look at your work than, just sitting down and reading templates of slide, which, could be important, might not be important. I mean, that kind of question shouldn't come to me.
Agreed. So when a company fails due to execution issues, does the industry get judged or the company, just the company?
Execution issues in terms of what? If you ask me Byju's, failed because I'll take example. If you ask me Byju's failed because of internal financial management. The industry was not in that. Of course, EdTech, because the way it grew during the pandemic, people thought that everyone will be home learning different kind of things. Didn't work out. That was the industry failure. But if the industry failed because of factors that were industry oriented, definitely it brings a downgrade. So you always have to see in an industry, like no one knows where AI is heading. Tomorrow, if 1, 2, 3, 5, 10 companies in AI fail or in deep tech fail, it will never hamper the industry. Do you think Nvidia shares will start falling in? No, they're not going to happen. But if there is a supply shock or a demand shock, or like what's happened with EV, there's a battery shock, or people don't understand now where do you get more lithium from, then it's a industry down level. And especially at a startup level and a CV and at a pre-seed level, I will tell you one thing. Your selfish, in inverted commas, your selfish approach towards your business is more important than what's happening out in the industry. Because if you can explain me where are you differentiating, that's all what I need. Yes, as a VC, as an incubator, as an accelerator, as a pre-seed angel, I might look at the industry just to understand whether do you have enough space to grow or not. That's the only reason I look at the market. But if you can tell me that there is enough space to grow, I'm happy. I'm not going to even look at industry as far as I know that your utensils are in right place. And that's what matters to me.
Right, that makes sense. So I'll merge questions because there are a lot of questions.
Yep.
What should a founder expect from an investor, like potential investor, in terms of time, work? And then second question would be, what are your perspective on founders who are also working on full-time jobs?
Number one, the first question, what you expect is something that so when you ask for money, it's not just money. Your slide that says the amount of money you are raising and the capital, it should clearly mention what is your expectation from the founder. Because again, every startup has a very different thing. I have had founders who told me, take a board seat, come to me every quarter and I'll show you progress. There have been founders who've told me, please be on my shop floor and help me solve problems on an everyday basis. Because when I make an investment, again, like I said, time is very, very critical for me. When I make an investment, I'm very, very clear, do I have enough bandwidth to support you daily on the shop floor? Or do I have enough time to, attend your board meeting or, answer your call? Again, that depends on the amount of stake I am holding in. Secondly, the amount of money that I have put in, does it justify? And even more about it, is the problem solvable by a founder themselves? Because understand again, guys, you might have heard this on various Shark Tanks also globally, not just India, is I am an investor. Do not consider me as a co-founder. I might make a couple of calls for you. I might throw a couple of introductions to you. If you are expecting me to negotiate a deal for you, if you are expecting me to run a mandate for you, if you're expecting me to solve a technical problem with you, I'm not that person. That's not my job, in clear inverted commas. I might help you here and there, get you people, get you connected, help you do things. But if you are expecting to me be with you on the shop floor and understand how sales are happening, what market research I have to do, that's not my core job. My core job is to make money, because if I do that for you, I'm sure you're not gonna support me to return my money to my investors, right? So that's the first part. Define clearly what are you expecting from the investor rather than asking the investor what they can give me on the table. Second, sorry, Nikita, what was the second question? I kind of missed it.
What is your perspective on founders who are working on full-time jobs other than the startup?
Pre-seed level, acceptable. Once you reach seed money, not acceptable. Because the only way I can gauge whether you have full commitment to your business is something, how much time do you spend on it? And if you're gonna tell me that 8 hours you're gonna sleep and the next 8 hours you're gonna work for someone else, I'm not investing money for that 8 hours of time. So if you justify why do you need it, and that too, it's allowed only on, it's a graveyard question to ask an investor. But on a pre-seed level, I might still consider, because you have bills to pay and you have to justify what bills are you paying.
Right.
I might accept full-time though goes out of the question. Even if part-time or freelancing for something else, I can understand, because there are a lot of ideas that you can't document or bind them by NDAs, which a person carries in his head. And if he's selling it to a potential competitor tomorrow, I'm not investing money for it.
Right.
Yeah.
Makes sense. So I'll merge again 2 questions. What are your thoughts on domestic natural gas resources projects or conversion of hybrid electric cars, something that saves the energy or in the energy space?
At a pre-seed level, very difficult. I might not even look at those ventures. I've had tons of EVs, because there are a lot of aspects and a lot of bigger guys, especially when you're dealing with energy, you're dealing with resources that has government control, or has some way government can obstruct it. It's very, very difficult. Yes, I might look at it if there is a technological angle. Like, I'll give you an example. We invested into a company in 2016 which started making solar fryers.